The ECB cut interest rates for the first time in 10 months. ECB President Mario Draghi also said that he may take further action if necessary to boost the Eurozone economy. And for more on this, we're now joined by Simone Foxman, a reporter at Quartz. Simone, thanks for joining us.
Thanks for having me.
So the ECB cutting its interest rates to 0.5% from 0.75%. What's the significance of this move? What does this actually do?
You know, honestly, there may have been a rally in markets, in U.S. markets today, but certainly this is actually not that important of a move. It's something that was long overdue. Credit has been really tight in the euro area, and particularly for small and medium-sized businesses, it's been rough.
I want to bring in Phil, who's also been covering this story very closely from DC. Phil?
Yeah, this is a wild story. The markets obviously were happy today, but the issue is the government, are the leaders in Europe giving what the people want? And is there a disconnect from what the consumers and the citizens expect? But because they expect basically no austerity, no big stimulus, but they also want sort of the good life, if you will. Is there a disconnect?
Yeah, absolutely. I think there's a huge disconnect. And I think the ECB is put in a very difficult position. On one hand, it has to say, we're going to do as much as we can. And on the other hand, it's begging European policymakers to do something to fix the real big problems at the heart of the crisis. And they're really not moving on that respect. They were supposed to do a lot of things, make a lot of structural changes, and they've kind of dragged their feet or kicked the can. I know it's a bad phrase.
Speaking of structural changes, austerity measures have been implemented, much to the dismay of many of the people in the ground in the countries that are feeling them. And both French President François Hollande and the new Italian president are actually asking for these austerity measures to be reconsidered. Is there any chance that that would actually happen? And is there any evidence to show that these austerity measures are actually doing something to help the economies?
Well, let me say that austerity measures are necessary, absolutely, to some extent, to make countries like Spain and like Italy more competitive down the line. They have to lower labor costs. Same thing with Greece, Portugal, Ireland. Stuff like that has to happen, and it is happening to a certain extent. That said, you know, austerity doesn't grow an economy, and certainly if you want to put yourself back on the path to growth, you need to do certain things. You need to recapitalize the banks, put more money in the banks so that people aren't constantly scared that they're going to fail. And that really comes from the top and not just one country that is going through a reform program. They all have to work together on this, and they really can't agree.
Okay, recapitalizing the banks, one thing. Mm-hmm. What else needs to be done? The president of the ECB, Mario Draghi, said he will do more if it warrants it. What could he be doing?
Well, he could, you can package small and medium-sized loans to small and medium-sized enterprises, and they could potentially buy them or buy them off the banks, and that would encourage banks to lend a little bit more. But that's really unprecedented for them. I think it would be a really big step in the right direction for the markets, but it would discourage European policymakers who the only time they act is when the markets tell them they have to, because the euro monetary union is going to collapse.
I want to ask you about those policy makers that you're speaking about, because here's the situation: I'm skeptical of the fact that the headline says they're cutting rates because they want to pump more money into the system. Is there something that the leaders are seeing that we're not hearing about? What are they afraid of?
I mean, I think they're really afraid that banks are going to have a lot of problems. Part of the ECB's decision today was to lower the rates on kind of bank emergency funds so that they could more easily access funding from the ECB overnight. You know, that's reading a lot into a little thing, but there are really huge concerns about not banks in general. The banks, the numbers look good, but only because certain banks are doing well.
So you say that they're afraid, they might be afraid a little bit about the health of the banks, but what about the citizens? What is the ECB seeing that's scaring them essentially to cut rates, because I don't buy the fact that they want to cut rates because McDonald's or some European company needs to have extra funding.
Well, absolutely. They're seeing banks not lend to small businesses, to individuals.
Okay, with these rate cuts, and I'm sure one of the factors prompting the ECB is the increased unemployment rate and the slowdown in growth that we've been seeing across the Eurozone, which is still very much in a recession. What about the countries like Spain and Greece? There are concerns by many economists, by many analysts, that those rate cuts don't actually filter down to those economies that need it most.
Right, that's exactly the truth. But they don't filter down to even the core Eurozone economies. They don't filter down in the Netherlands. I'm guessing that they're not filtering down, though that's my conjecture. But they're not filtering down in Germany anymore, because you're seeing slower manufacturing growth. You're seeing the core begin to be affected by these greater Euro problems.
So what's the worst case scenario here?
I think the worst case scenario would be an incredibly long and drawn out recession. I think you're going to sacrifice a lot for you're going to force the people to sacrifice a lot, and that's going to have huge effects, not today, tomorrow, but 10 years down the line. I think that's really important.
Let's hope it doesn't get to that. Thank you so much, Simone Foxman, reporter at Quartz.